Great. Thank you, Mr. Chairman, and thank you all for joining us today to discuss important legislation that will help empower small businesses to raise more funding and which will allow them to grow and create more jobs, my favorite topic. Small businesses create more jobs than any other business sector in America and are leading the way on exciting new products and technologies. In fact, studies have shown that startups create an average of 3 million jobs annually. Ensuring that small businesses are able to raise capital is absolutely essential to getting our economy back on track while we are still recovering from the financial crisis. For that reason, I have introduced legislation along with my colleague on the other side of the aisle, Representative Terry Sewell, the Small Company Simple Registration Act, H.R. 1723, which would streamline how small businesses file additional registration documents in order to continue offering securities to willing investors. In fact, this common sense idea was originally proposed by the SEC's own working group on capital formation. Mr. Kovacs, how are small issuers harmed by not allowing forward incorporation by reference for Form S-1 registration statements?
You know, it's interesting. The friction costs associated with raising capital can be quite high. And any way that you can reduce those costs yields more capital to the companies that need it. By allowing forward incorporation on an S-1, per se, means that you don't have to be continuing, if there's some delay in the offering, you don't have to be continually updating those statements. You just reference your Q or whatnot when you're next filing. We do that all the time as a public company. We reference forward aspects of our proxy when we file our K. So this is just allowing less costs in terms of updating an S-1 if there's for some reason a delay or you're doing a follow-on offering inside of a year after your initial IPO.
Well, you may have answered my next question somewhat here, but how would allowing forward incorporation by reference for Form S-1 registration reduce and simplify disclosure burdens for smaller issuers? Obviously, you talked about the cost factor, but there must be compliance issues and simplification of the process, correct?
Yeah, I mean, there's time aspects too. Companies that want to do another follow-on offering inside of a year of the IPO using S-1. We did it. We went public in June of 13. We did a follow-on offering in February of 14. We had to go and update the entire S-1. It required a couple of, a few weeks of time and outside legal counsel and of going to get things done and updated. Whereas if we could have referenced our K, which was going to get filed about 2 weeks later, would have been much simpler.
In your opinion, would it be appropriate to also extend this provision to emerging growth companies?
Yeah, I think so. I mean, that would have been, we were an emerging growth company at the time, and it certainly would have been helpful.
Mr. Quadman, how else does the current SEC registration process make it more difficult for smaller issuers to raise capital?
Sure. So first off, just to answer your last question, I would welcome an extension to emerging growth companies as well. Part of the issue is, and I think what your bill is getting at is that if you create a company file, you can use incorporation as a way to streamline disclosures and get the information out to investors without repetitive disclosures. So what we're faced with here is that the explosion of disclosures particularly for smaller companies, isn't providing material information to investors. So what we need to do is to determine and press on the SEC to determine what are material disclosures, how can it be disclosed effectively, because this will actually help investors get the information. It will help smaller companies communicate that information, and your bill is an important step forward in that.
What are some of the other filing and disclosure burdens that disproportionately affect small business issuers?
So you start to look at things like historic stock price, disclosures about the public reading room at the SEC, that individually sound like small things, but you start to add them up, and they're costly, and they're time, and they're burdensome, and there's a time opportunity cost. I was talking to a company that we were doing some regulatory meetings with, who's also an emerging growth company, and he was talking about the fact of, well, I have a choice right now that I can hire 2 compliance people to deal with more disclosures that are not going to give more information to to investors, or I can hire a scientist.
Right.
He goes, which do you think I'd rather do?
We hear it all the time. We hear it in every industry, not just the financial service sector. People that are wanting to be, businesses that are wanting to hire people to grow their business as opposed to hiring compliance officers, lawyers, people that are going through all of this red tape. I appreciate your indulgence, Mr. Chairman. My time has expired, and I thank the panel very much.